channel this morning. My name is Adiola Tony Toby, and this is storytelling, legacy storytelling. And today I have someone very special that will be sharing from his wealth of experience with us. He'll be sharing his story, he'll be sharing from his experience, and there's just a lot of takeaways. Please stay tuned to the end, and I promise that it's going to be a valuable time that you have with us this time. So before I go on, I want to welcome my friend, my mentor, my manager, Ike Afam. Ike, you're welcome. Thanks for joining me on this episode.
Thank you so much, Adiola. It's a pleasure to be here today.
Thank you. Thank you. So, um, we're getting started. Just as a warm up and form of, because this is what this channel is about, is actually to be able to share from my experience through life stories and the impact that these stories have made to people, so that a lot of our viewers are able to learn from this and be able to take away action steps. So can you share with us your personal journey into the insurance industry? What inspired you to choose this path?
Interesting. Thank you so much. And maybe if you permit me, probably going to start from, a little bit about myself, my background. So we moved to Canada in 2015, exactly 10 years ago, May to be precise. And before then, I have been a drilling fluids engineer working in oil and gas, drilling oil and gas wells around the world. I was working for Total Energies at the time. And despite moving to Canada, every 4 weeks I still made my way back to Lagos, Nigeria to work. And I did that every 4 weeks back and forth for 5 years until the end of 2019.
Wow.
So while I was doing that back and forth, sometime in 2017, two thoughts came to mind. What if life is short? And what if life is long? And in my mind, in that time frame, I knew there were a couple of aircrafts that, fell from the sky. But I'm grateful I was not in any of them, but it can happen. So that thought came to my mind, what if that happened? And then on the flip side, what if life is long? I realized that we have, some 6% chance of living longer. And then I remembered all the pension fund we've contributed to back home in Nigeria and how between 2015 and now, all of that has lost a lot of value, at least 1000% by way of exchange rate. So thinking about this, these two things, stand right before me and I needed to take an action. So I found out then that I could find life insurance that I didn't have to die to use. So it was a no-brainer and I had to, take that opportunity and that was how I got in there. So that's how I found myself in that space because when I found it, it made a lot of sense. I researched. I also found people who were ahead of me, looked at what they had done, and it made just very common sense. And I had to get myself in there. Thank you.
Interesting. In these years that you have embraced this path, has there been any moment that really cemented for you the importance of life insurance?
Yes, there have been moments because I've had the experience of, asking people to come and take a look at what I've done for myself or I'm doing for myself to provide for what if life is short and what if life is long. And there have been different parties to the responses. Some parties have said yes and some have said no. No, some people said no bluntly. Some people, felt that, oh, they had a lot of time. But I've had cases where I lost a client, like meaning a client passed away and they had a coverage. And I've also experienced a situation where, somebody whom I'd been speaking to for 3 years, never did anything, and you know, he was diagnosed of cancer, and I think this year, yeah, March this year, he passed away, and
Wow.
I knew how we were all, brought in to all do GoFundMe. And by the time the GoFundMe was done, it was used for funeral, and funeral usually around about $18,000, and only 5,000 was left, which was given to the spouse, and that
Wow.
was not enough to pay for the mortgage.
Wow.
So,
Wow.
so these are two clear scenarios that point
Wow.
to these facts that these
Wow.
things are true. It doesn't matter how people want to push it away. The truth is the truth.
Thank you for that. The truth is the truth. I was actually going to come to that question much later, but since you mentioned it, I wanted to say something. You said, especially with this experience of, I mean, this other person that passed on and there wasn't life insurance, there was something that you said about, oh, $5,000 was given to her and that would not be enough to pay the mortgage. Now, how do we compare that to when people say that, mortgage in Canada, there is a piece where there is a mortgage insurance within the whole package of buying a house. How does that speak to that mortgage of when someone passes on?
Yeah. So basically, what happens is that when you're trying to get a house, there are three things that you're going to be thinking about. There is what is called the mortgage default insurance. So mortgage default insurance is for when you pay less than 20% down payment
Yeah.
in your, trying to buy a house. So what that does is that it protects the lender from what if you, the borrower, fail to pay your mortgage, and that is why you are alive. So the Canada Housing Mortgage Corporation, to whom that responsibility goes, will pay the lender and then come after you who is alive. So that's mortgage default insurance. Then you're going to have home insurance, which has to do with, you know, the house being the collateral needs to be protected for what if there were things like hail damage, fire, flood, whatever. So the house being a collateral needs to be protected, all for the lender. And then you now have the mortgage insurance. So the mortgage insurance is to protect the lender from what if the borrower passed away. If the borrower passed away, who is going to pay this mortgage? So in that scenario, they want to be able to have a way by which the balance of that mortgage is paid off. So for me, it's better for you to have the life insurance instead of the mortgage insurance, because you can go anywhere and meet with any lender. You don't have to be stuck with them. And then the mortgage insurance is a decreasing benefit type of insurance. So what that means is that as you pay mortgage insurance, that amount is fixed that you pay every month.
Every month.
While at the same time, what's going on is that you are paying down the mortgage. So if your mortgage was, let's say, $500,000, like in our case, when that was offered to us by one of the banks who was our lender, we were supposed to pay $175 every month in addition to our normal mortgage as mortgage insurance. So the outstanding mortgage was 500,000. So if we paid that down, and let's say 20 years down the line, only 20,000 left of the mortgage, and we still paid the 175 every month, the benefit is that 20,000 which will be paid directly to the lender. So, but I felt and I knew that it was obviously better to have to have your own life insurance, because that way the benefit does not decrease, and secondly, I can port my mortgage from one lender to the other.
To
If
the
I
whole
find a
name.
better interest, I'm done with this mortgage lender, I move to the next one, and then there's nothing like, oh, come and get another mortgage insurance at an older age, which it means a higher premium. So that's why
Wow.
this is better.
Interesting. Interesting. This is a very big takeaway for, I believe, a lot of our viewers will be getting value because I spoke to a friend, and I was asking, do you have a life insurance? And the response was, yes. I mean, that's something that you have to do when you are buying a house. It's already included. And I kept quiet because, of course, I also know that there are a lot of shenanigans around, life insurance. So I just, because I also knew that there was a better benefit for you if you have your insurance that is, I mean, placed on your life rather than just tied to the mortgage. Thank you so much for that knowledge. So I also want us to demystify some beliefs
Yeah.
that has been going around about life insurance. So, from your experience, people believe. I mean, from the little that I've seen in my trying to engage people with respect to life insurance, they just believe that when you talk about life insurance, it's more about costs, it's more about death, it's just about expenses, or an agent just trying to come and milk them off. How will you explain this to people so that there is a better knowledge around what this is about?
Thank you. It's you can't blame people because most of us have come from environments and societies where that has been the case, where even our systems were not trustworthy. We couldn't be sure that what they say is what it is.
Yeah.
So that's where a lot of us are coming from. But what we have found out, and which is the truth, is that life insurance is not all about dying. Life insurance is a tool that you use to protect all the other work that you have been doing. And when you talk about protecting, there is also the means to be able to provide for the future. So what did I see? And this is my own personal experience. When I found out that it wasn't all about dying, that I could take advantage of what was there, I doubled down. So what I simply did was that I set up my own policies in a way that it provides for what if life is short and provides for what if life is long. Meaning that a portion of that premium I'm paying is going to the cost of insurance, which is the risk of mortality, and then the other portion is going to the investment side. And that portion going to the investment side is growing and compounding down the line so that down the line I am able to access money from there through the various means by which you can access money, including direct withdrawal, policy loan, collateral bank loan. These are the three ways you can access money while you are alive. So the deal here for me was that I was going to do this every month for 20 years so that by the time I'm saying retiring, between the both of them that I have, I should be able to access about $140,000 every year from age 67 based on what I'm doing so far. And that's my own choice, and anyone can tailor theirs to whatever they want.
They want.
However, the point is that I am not yet even at 67 or retiring. And just this year in January, on the 16th of January to be precise, I accessed $50,000 from there. And I put it back there as I wanted. So why did I access 50,000? Because I wanted to double down on my tax-free savings account. So when I also looked at all the prevailing situations at the time, I changed my mind and I put the money back. And instead I doubled and decided to do dollar cost averaging, directly from my bank account. So basically the point I'm making here is that all of those things are possible. And I've seen tons of persons that, I've helped so many people to be able to access that money from their policies without any questions asked. Now, if you permit me, I will be able to give you a comparison of why this is more important, like why this is very beneficial as
Yes.
compared to any other strategy. As
Yes.
you all know, we are all very interested in buying houses, which is a good thing and very, very good. But in comparison with using the life insurance for the same purpose, the truth is that, the life insurance is liquid if you set it up in the way that it should be set up for that purpose. Very liquid. The house, the equity you have in the house, you need to qualify. to be able to get that equity. You need to be on a job. You need to have a job letter at that time. Your credit score has to be right. You have to be working in Canada. You have to have a credit score, like I said before, of a certain number. Your debt to income ratio has to be right. So all these criteria are things that you must meet to be able to have to access the equity in your house. Whereas with this life insurance, using a policy loan, for instance, you don't have to ask anybody anything. You don't even have to be living in Nigeria at the time. You don't have to, sorry, in Canada at the time. You are free to be from wherever. It does not affect your credit score. Your credit score is not a prerequisite.
For
You're
you
not
to
under pressure. You can pay when you want. The only thing that happens is, God forbid something happened to you, that debt benefit will be paid less what you have taken an interest. And today, there are companies that are able to do this interest at around 3.9%. That's what I got it at. 3.9% per annum.
wow.
Which bank do you get this from?
Wow.
So this is for me liquidity. What am I getting with this? I'm getting protection, I'm getting growth, I'm getting compounding, I'm getting liquidity. Because just when I want it, I have it. And that makes a lot of sense. So these are the things that you can use them for. And business owners are doing the same. Lots of them that have been helping, we've been helping to set up these things. They have their own liquidity. They're using this as a bank. So it all depends on who is interested and what you want to achieve.
Interesting, interesting, very interesting. Thank you so much for all that knowledge. So, from your experience, what are the biggest myths or misconceptions that you've seen people have about life insurance?
So people feel that, people have this conception that, next of kings, you know, mismanage, wealth and resources that people have left for them. People feel that life insurance companies are not trustworthy, but I can tell you that that is coming from, the experiences that people have and perceptions they have from where they come. That's what that is. And I've seen people who feel that, Jesus is their Lord, their protector. And all I just wonder is the people who actually have this experience of loss. I don't know whether people think they are not also, covered by Jesus. So the truth is, those myths are just beliefs. The reality, you see, you never realize the reality of these things until it happens. And when it does happen, it is too late.
True.
It's too late. It's too late. So those myths are just things that people have found themselves believing over time, but they're not true. People also think that it's very expensive. Yes,
Yeah.
it is going to be very expensive for as long as you procrastinate. The best day, the best day to have it is the day you know it. You hear it. If you are listening to this interview, this day you hear it is the cheapest day ever. Because trust me, life will continue to happen. It doesn't matter what you think and you say. Life happened. That's how we were all born. Life will happen and it will be time to go. But if you say, okay, you are not at risk, fine. What about legacy living? Oh, you might say, oh, your parents never left you anything. But if your parents never left you anything, is that the reason why you should leave nothing to your children, to your loved ones? Love is action, and that's what it is.
Thank you.
That's it.
That's a hard one, but really the truth and the hard one that we need to hear, really. And I think this just takes me to this. I mean, next question, and well, it's almost like it's been. I mean, you've responded to it already. I wanted to say that for someone who is just starting, they're in their 20s, in their 30s, and because I had an interesting experience with my niece, and I mentioned to her that life insurance and do you know what this is about, and what do you even think about it? And it's just like all the misconceptions around. She was just like, no, oh, she felt this is just like some people that just around, and they just want to make some sales. And she really doesn't feel that it's something that, so I mean, it just like confirm again what people think about it. And I was looking at it from the, because from my experience and at the age that I am at, I look at young people, and every time I see them, what comes to my mind is, oh, what a privilege to take advantage of some important tools at this time of your life. So for people who are in their 20s and their 30s, and they are also thinking, what's my business with life insurance? What will you say to them?
The truth is that it's very natural to think as a young person that there is no need for this. And I think in trying to respond to this question, I'd rather tell the story. So, just on the 3rd of June, yeah, one of my clients passed away. This client is somebody that has been my client from age 29. She's single, not married, with no kids, been in Canada for the last, I think since for almost, I think 13 years. She came to Canada, and when we met 4 years back, the objective was to provide for what if life is short and what if life is long. And naturally, that would have majorly been for the purpose of what if life is long. So we set up these plans, and she kept at it for especially the reason of what if life is long. Meaning that she's doing something that a portion goes to cost of insurance and the other portion goes to the investment side. So that thing is there investing for her, compounding for her over time. So that down the line she's able to make something out of that investment side. But sometime last year, which was year 3, she reached out to me and said, oh, she was in a financial situation and she, needed to just kind of, take a break. And in fact, she was like, she wanted it cancelled. And I said, well, sorry, you don't need to cancel this. You can as well stop payment, because there's a difference between stop payment and cancel. And the difference is that stop payment, you stop paying. Cancel, you lose the money that is there because you are not yet past what is called the surrender charges period. So she listened to me, and we put the stop payment in place. So for exactly 1 year, she wasn't making any payment. And exactly 1 year after, she went to sleep and didn't wake up because she had some medical situation at the time. Now, when this lady passed away at age of 33, she still had no husband, she had no kids and everything. But surprisingly, guys, you will not believe it that it cost $18,000 to put her to rest. And that $18,000 was not coming from anywhere. So if not for the sake of anybody, remember she doesn't have anybody in this country. So who would have laid this lady to rest? Who? Nobody. Nobody in Winnipeg. Nobody in the entire country. It was on the premise and strength of this death benefit, which was paid to the family in Nigeria. The beneficiary is not even in this country.
Wow.
And all of that was paid to the Union Bank account in Nigeria.
Interesting.
Family is so grateful. And it's on that premise that there was resources to be able to lay this lady to rest. So imagine that. So if you're a single person and you think that it's, this and that, the question is, do you have this prepared? Yes, you might think it doesn't happen when you are young. That's not true. Life happens. Get ready today. Don't push it away because you may not be qualified. I've had young people who gave excuses And when they were ready, they had fibroids. And once you have any of those things and they say, let us check, you're out of the game.
This is very interesting. You know, and I think this is like a light bulb. And for all of our listeners that are listening to this, if you do not go away with anything, please note this, that the opportunity will not always be there. Do not think that you will always qualify and I can always just hop in anytime that I want. What if life happens like I just shared? What if something has gone wrong with your health? So, the reason why it is a lot better and easier, especially for younger people, because at that time of your life, the risk of all the health challenges are still very minimal. So, I mean, this is just an example of a true life story of a young person who never thought health challenge was going to come in 2 or 3 years just after she came on board. Thank you so much for that story, for that experience. And we're promising to bring the person that is really, really, direct to the story on our next episode. She's going to come and share, what this actually meant, the whole process, how they got to where, I mean, losing the sister and what happened after. That is going to be another episode, so please look forward to it. So, going towards the end of our discussion today, now we just shared that one of someone who had unfortunately, who passed on. How about for someone who feels just like, some people will say, so yeah, is it just about death and they are still young? What will be the takeaway to say that I can look at life insurance as an option?
So the takeaway is that I also am, at least I'm experiencing the other side of it. And just so you know, like those policies are doing very well for me. In my first year, my policy returned 12% per annum as against 8% projection. In the second year, it was 16% per annum. And then in the third year, it was, I think, $6,000 more than the projection. And then in the fourth year, which was in 2022, investments were on the low side globally, and that did about $3,000 less than the projection at 8% per annum. And then in the fifth year, it was somewhere around 17%. And then in the sixth year, it was 32%. And that 32% in that year, which was between 2023 and 2024 September, that made about $21,000 of interest.
Oh my
And that was the same thing on the second policy that I have, which made $20,000 as well. So in
Wow.
2024, between 2023 September and 2024 September, my two policies between the both of them made $41,000 of interest passive.
Wow.
And that was the
Wow.
premise that I was taking, that I took the $50,000 from my policy in January.
Wow.
Because I wanted to, double dip while compounding my money at
Oh
different
my
channels.
God. Oh my God. This
So
is
these
so
are facts. This is
interesting.
what I have done. This is what I am doing. And it just makes absolute sense to do.
Yes, it does. Yes, it does. And I believe with what you have shared with us today, a lot of our viewers will know that, and they will have a better understanding that insurance is not just about death. Insurance is not just about expenses. Insurance is not just about an agent chasing you just to be able to make money off you. Insurance is about yourself. Insurance is about love, like I shared earlier. What is love without action? What is love if after, God forbid, anything happens, your loved ones are left with no clue as to how to move on?
Yeah.
And then what is even love to yourself? If after living so well, you find yourself retiring and there's practically like little for you to fall back on. So, do you really love yourself? Think about this. So, in wrapping up, um, can you just share with our viewers what is one step that they should take after listening to us today?
So the immediate first step for anyone who is listening today is, take that step. There's a saying that those who really, go out there meeting with advisors are always going to do better because they're going to have information. And not just information, you're going to have the privilege of meeting somebody who's walked the talk. At any point in time you want to make a decision, ask, is there anyone that can be pointed to you who is walking the talk already? So that way you're able to, have clear cut, strategies to be able to move forward. So immediately meet, with someone, of course, an advisor like Adiola Toby. Myself, I'm one, because a lot of us are here, we don't even understand our needs.
Yes.
When we understand our needs, we'll be able to determine wealth types and which way and which strategy to go with. Without understanding the needs, you cannot understand your solutions.
Yes.
So those solutions will come from understanding the needs, and she'll be able to help you understand your needs and then build on top of that towards the direction of solution. And when you see it, find the solution that works for your budget. That's what it is. When that check was delivered, to this client of mine who passed away in June, right? There was nothing writing the type of life insurance it was.
Yeah.
It was simply money in dollars, and that was it.
Yes.
And these dollars was paid into a Nigerian bank
Yes.
in a dollar dominated denominated account in Union Bank,
Wow.
to be
Wow.
precise.
Wow.
So you can imagine how that family's life has been transformed. So that's the process, and those are the steps to take going forward.
Thank you so much for that legacy story that we ended up with. I mean, this is it for our viewers. Make sure that you don't hear this and allow another day to just go on. You know, like I shared earlier, the best time to take this decision is still now, it's still today. Every day you live that it passes, it becomes not just more expensive, it might even become unrealistic for you to be able to jump in. So,
Yeah.
if this is a discussion that you like to take further, like we said, it is unique to you. Everyone's story, everyone's life insurance journey is different and it is personal. Just jump on my calendar. The description to my link is below on this call, and let's take it further. Let's look at what you have. Let's look at what you can put in place. Let's look at what can work for you and what you can begin with. Okay? And I also know that there has been a lot of shenanigans around life insurance agency where people are being compelled to come and do the business, come and sign up under me. This is not about it. No. This is about thinking about yourself first. This is about thinking about your family first. This is about thinking and taking a step in the right direction that will help you to begin to start building legacy. So, until we come again, we come next time. Thank you. Continue to love yourself, continue to love your family, and do what is right. Thank you so much, Ike, for joining me on this episode. Thank you for all the nuggets, all the information that that you shared with us. And I believe a lot of people that listen to us today are going to be taking action. Thanks so much, Ike.